Well, listeners, another week on the Money Mentor podcast. Lachlan, Hammett here again, and Doc Wilson. How are you today, Doc? What's going on in the world of property?
Always plenty going on in the world of property, Lachlan. It is our first sort of full week of spring, finishing now. So the spring selling season is upon us. We've certainly had indications of rising activity in our auction markets over the last month, which is what we expect through August, the late part of August particularly. But we're into the month of September. That means the official beginning of the spring selling season. And again, we had some reasonably positive results, particularly from Melbourne and Sydney auction markets on the weekend. The smaller markets were a bit mixed, however. We saw a bit of a falling away of clearance rates. And a lot of that was for some reason, we had a bit of a hold up in the actual data that was reported on the weekend. So we'll just keep an eye on some of those smaller markets over the next few weekends. But no doubt that Sydney and Melbourne are feeling the spring vibe. You know, spring has sprung, and we'll have a look at those results. But we've got some important numbers. Every week we have important numbers. But firstly, we have important numbers for the rental market. So we have the latest rent report for the month of August. Some better news there for tenants, with vacancy rates just still easing a little bit from those ridiculously low levels. No sign really of some relief from rents, but vacancy rates are improving. I don't think that's an issue on the supply side. In other words, I don't think we're getting more supply coming into our rental market. I think we're getting some reduced demand, and that's coming from sort of social changes that are responding to these extraordinarily, tight rental markets we've had for well over a year, in fact, 2 years. And that's what happens. People get marginalised out of the rental market because rents are just too high and the queue's just too long. So they give up or they look for alternatives. So we'll have a look at the latest data there. Also, we've got the latest building approval data, which we look at. That's important, particularly in relation to rents, because we need more properties on the ground to help us improve affordability and certainly to help us with the rental market. Next, we're going to look at the latest home lending data, which has some very interesting insights. So watch out for that one next week. But today is all about the rent report and the latest building approvals data, which was higher, but didn't really give us a lot of hope to sort of resupply our undersupplied housing markets. Heading in sort of the right direction, but only just. We'll have a look at that. And of course, as I've already alluded to, the latest auction market results for the first full weekend or the first full week of spring. So well and truly into that market environment, which is the time for buying and selling property. And we're seeing signs of that already early days. So shall we get started, Lachlan?
Take it away, Doc. Always here to hear about supply and demand.
Yes, on our weekly journey. So we'll get that slide deck up and running, and then we can start talking about all these numbers. So there we go. So My Housing Market is my brand. We present in conjunction with Infinity every week the podcast, which gives us all the latest information as it occurs during the week in regard to the housing market that assists buyers and sellers in making their decisions of buying and selling. And we want to provide with our audience with rational decision and data, rational data and commentary for their decision making. So it's a decision making tool set that we provide every week, and I think that's the important thing. If you're going to be a talking head in any particular field, we want to be a talking head that uses a rational and analytical approach to the market. And that's why we put together all these data points. And today we're going to start off with some very interesting news for the week ending September the 11th with the August house and unit rent report. We're also going to look at July building approvals and the latest weekend auction results. So the home rental market continues to ease, which is sort of good news for tenants going forward. That it is improving, that there's a little bit more choice out there in terms of rental properties, but it's not really a product of more supply, it's just less demand. And it may be also a bit of a winter effect. Winter rental markets tend to have less demand about them, or it might be those social changes that we've discussed that are being activated by these very tight rental markets we've had for a couple of years with skyrocketing rents and record low vacancy rates. People tend to make decisions if they can't find a roof, can't secure a roof over their head. Maybe they stay at home longer with mum and dad, or stay where they are longer, or maybe decide they're going to live with friends or their siblings, or they're going to get a unit, not a house, or a 3-bedroom house, not a 5-bedroom house, or move to the outer suburbs, or move to a regional area. All these decisions are activated when it's a very tight rental market and tough to get in, with lots of competition from prospective tenants for properties that are advertised. So it has. We had a month where vacancy rates actually continued to ease. We've had record low vacancy rates, well below 1%, which is quite remarkable and consistent amongst most capital city markets, below 1%. However, we've seen over the last month or so that those vacancy rates have just started to tick up a little bit. They're still very low generally, and we're not seeing a lot of relief from rents that we would expect with higher vacancy rates, meaning more competition, more supply, more choices for, technically anyway, theoretically, more choices for those tenants looking for a new property. And as I said, maybe that reflects that it's a bit about lower demand rather than more supply. But nonetheless, it is good news for tenants, moving in the right direction. But our markets are still very much favoured towards landlords with higher rents and still upward pressure on rents. But we'll see if that continues over coming months. But it's still a very, very tight rental market. But from the tenant's perspective, at least it's moving in the right directions in terms of the data. Now, whether that means there's more properties out there or you've got a better chance of securing a property than you have remains to be seen. So we still have that imbalance between supply and demand, driven by low home building we've had over the past decade almost, but certainly over the past few years. And of course, we've had the resumption of high levels of migration, which the government are doing something about. They've decided to cut away a lot of students coming into Australia. I'm not so sure the university sector will be happy about that. But nonetheless, it is a policy designed to reduce demand for rental properties because, of course, international students got to live somewhere, and first port of call is the rental market for them, particularly the unit rental market. But as I said, still have a challenging market for tenants, and still very positive for landlords in most of our capital city markets. So here's the drum roll. Let's see the results. Some easing in rents in Sydney from that record $650 a month we had last month, down by 2.4%. Melbourne, which has had a strong growth in house rents over the past year, just also eased a little bit, down by 1.6%. Again, we must point out that this is the winter market, the end of winter market, where we do tend to see a little bit less demand. So whether it is a seasonal thing or a rebalancing of our market will be revealed over coming months. Brisbane house rents, however, up 0.4%, same as Adelaide. And again, some easing in rents in Perth, similar to Melbourne and Sydney, down by 1.4%. Hobart down 0.9%. Darwin up 2.9% house rents over the month. But Darwin's a very volatile market. We tend to go a bit up and down like a yo-yo from month to month because it is a smaller market, and it is more affected by seasonal patterns of activity than the other markets. And Canberra also down by 0.4%. But when we look over the year, we can see that there's, with the exception of Hobart, all of our capital cities have reported increased rents. Perth up by 10.8%. So not only is it a boom market for prices, for home prices, it's also a boom market for rents, up by 10%. Brisbane up 9.9%. Adelaide up 8.5%, Sydney up 6.7%, and Melbourne up 5.2%. Although these rates of growth annual rates of growth have started to ease over the last couple of months, they're still approaching double-figure results, and they're still well above the inflation rate and still well above the rate of incomes growth. So it's a negative position, those annual results. But as I said, vacancy rates just eased a little bit. For houses, they tightened a little bit over the month. Vacancy rates are still above 1%. However, just above 1% for most of the capital cities, which really means anything under 2% is very much about higher rents and very much about restricted supply and high demand for rental properties. In fact, the highest vacancy rate we've got there is Canberra at 1.9%, and all the rest are, even though they're now above 1%, which they've been tracking below for quite some time, it's still very much a tight market from the tenants' perspective, and very much in favour of landlords going forward. So let's have a look at units. Sydney units up by 0.7% over the month, back to that record high, $750 a week. Melbourne was steady, but Melbourne rents have been increasing for units quite steadily over the past year. Brisbane and Adelaide down marginally, 0.4 and 0.5%. Perth down a little bit more substantially, 2.4%. Hobart down 4.3%. Canberra was flat, and Darwin up just a little bit by 0.2%. But over the year, we're seeing the same sort of results. Still quite significant rises in rents over the past year. Certainly now below those double-figure results we were getting on an annual basis over the past few months. So, a little bit better in terms of annual growth, but still well ahead of, as I said, incomes growth and the inflation rate. Perth, the best performer there, up by 10%, and Adelaide 9%. But they are smaller unit markets, that Adelaide and Perth market. So we tend to get a little bit more volatile results, but nonetheless, and that means that it can change because of the mix of rentals from month to month for units, higher price versus lower price. But nonetheless, these are still consistently higher rents in Adelaide and Perth for units. Brisbane, which is a large unit market, up by 5.1% over the year. Melbourne now tracking ahead of Brisbane, up by 5.6%, even though its rent is still below the Brisbane rent. And Sydney unit rents up 4.2%. Some mixed results there for vacancy rates. But vacancy rates are a little higher there for units than they are for houses, but still mainly below 2%. So we've got vacancy rate in Melbourne kicked up a bit to 2.5% over the month. So looking a bit steadier there for Melbourne units. Sydney still tightish at 1.8%. Adelaide and Perth below 1%. So a tough market there for choices for those tenants looking for new properties. And Canberra, the outlier there, with vacancy rates up by 3.5%. So look, some better news generally, Lachlan, in terms of the tenants' perspective on the unit market. We've certainly seen an upward trend over the past few months, moving from those really ridiculously low vacancy rates and skyrocketing rents. But as I said, I think what we're seeing is just, people are giving up and now having to make choices based on a shortage of rental properties and high rents. And that's why we're seeing some improvement. We may be a little bit of the winter distraction, holidays, etc., that we see during midwinter with less demand. But we will see over the next few months whether this is a seasonal thing or an emerging trend. But there's no doubt that we are seeing more investors coming into the market. Let's watch out for that, the latest home loan data, which we'll discuss next week. So that might mean some more supply into our marketplaces, although we wouldn't expect to see that on the basis of home loan data at this point of time. But eventually that will work its way into the system. And as we're going to look at in a minute, we're not really seeing a big improvement in terms of development of properties coming into the market. So I think it's not really more supply, it's less demand that's giving us some better lookouts, but we'll crystallise that over the next few months, Lachlan. So if you want to get a copy of that, of the latest August rent report, there is a QR code on the screen, and you can take a picture of that, and it will take you to a PDF copy of that latest report. So get hold of that one. So home building approvals were up. Let's have a look at the latest ABS home approvals data. A big rise in building approvals, up by 10.4% over June. Sorry, that should be over July. Oops. Following a 7.2% fall over the previous month, June. So volatile units were the reason. We get a bit of an up and down, but we don't get a bit of an up and down. We tend to get significant up and downs from month to month for unit development approvals. And that's because you can get a really big development coming through one month, and then it doesn't, follow up the next month. So therefore you get a big rise. Then the next month you get a big fall because you didn't have the same amount. So it is about that volatile unit market where you can get very large developments being approved, on an individual month basis. And this month it was, over July, it was the Sydney market's turn. There was a big development that went through in Sydney, which pushed it up. So Sydney was the top performer, New South Wales top performer, up by 25.2%. But we're still, even when we look at the trend, well, let's look at the big picture here. Big rise over the month in units, 32.1%. Total up by 10.1%. But houses were just flat, 0.6% up over the month for house approvals. When we look at the first 7 months of this year compared to the first 7 months of last year, we can still see units are struggling, down by 9.4%. Houses, however, have definitely improved, and we're seeing the trend for houses starting to rise now, which is good news overall. Up by 8% this year so far compared to the same period last year, and up by 1.3% over the full year to July versus the full year to July 2023. But units well down, 16.4%. So, a lot better result from houses, but we're not getting the same result overall for units. In fact, they're tracking significantly the other way. And it means that if we put it all together, over the year to July versus the previous year to July, we've got a fall in 5.7% in total dwellings, which is not what we need, because we're trying to, supply our, demand, match supply with demand, and we're not being very successful with that when we look at house prices and house rents we've just seen. So that's the trend. That's the long-term quarterly trend for house approvals nationally. You can see just started to pick up a little bit. That trend is tracking higher than the same the same month last year. And that's because we had a very big rise in units, of course, overall. But it's still pretty flat and still below our peak trend line in 2021. Of course, we're still, working our way through that big surge in house building approvals we had as a result of the previous government's home builder policy, which really did push a lot of demand into the marketplace, which unfortunately put up house building costs. But nonetheless, a little bit of a better sign there in terms of the trend for the underlying quarterly trend for home building approvals. Let's see if that can continue next month. But we'd need another big approval, I would suggest, in units to match what we had over August. We'd need to see that, over July, to see that in August. As usual, Melbourne, the top performer in terms of building approvals this year so far. Interesting, when we look at the approvals there for houses, we can see there that Brisbane and Perth are actually approving more houses than Melbourne. And they're very small in comparison to the size of Melbourne. But of course, Melbourne is really spreading outwards now. It has some geographical constraints, and as I said, it's now being outbuilt in terms of houses by both Brisbane and Perth. And Adelaide's doing pretty well too. They're not that far away from Melbourne, and that's a much smaller capital city as Perth is. But of course, they're in the midst now of a significant a price boom and rent boom. So there's plenty of incentive there for developers to get and governments to get more houses and units on the ground, so they can match all that demand, which is really pushing up prices and units at significant levels in those three capital cities, Adelaide, Perth, and Brisbane. When we look at unit developments, Sydney's, which is usually the leading unit development marketplace, capital city marketplace, Melbourne's not that far below Sydney in terms of its approvals this year so far. So it's chugging along Melbourne. Now, Melbourne typically produces around about 40% of all the capital city building approvals for housing. So it's still motoring along there, which is good news for the Melbourne economy, which probably needs a bit of good news. Maybe not. I think the Melbourne economy is still doing okay, reasonably. Just a little bit of lack of confidence in that Melbourne market at the moment, in Melbourne generally. But certainly there's no doubt that the smaller markets that are in boom mode are building away to try to match all that demand that's coming into their marketplaces. Houses and units, you can see there over the year to date, versus the year last year. That units are booming in Perth from a low base. As I said, it's a small unit market, that Perth unit market. But units in the other capitals are still struggling. In fact, Brisbane's down 45.1%.
Yeah, look at Brisbane. Oh, God, yeah. Brisbane, yeah.
Fallen a big hole, which is good. Well, it's good news, I suppose, for your own Brisbane unit, because we're seeing strong growth in prices there. And
but they were never going to grow, Doc. Those inner city units, they were never going to grow. But look at them.
That's right. How long ago was that? Wasn't that long ago, when all the media was screaming about some of those self-appointed experts were telling us all about that terribly oversupplied Brisbane apartment market. Geez, I hope you didn't listen to them out there, because by gee, were they all wrong. Because it's now, there's queues, kilometres long for those wanting to secure an inner city Brisbane apartment. And rents are going through the roof, and prices are going through the roof, and we're not replacing them. That's a big fall on a year-to-date basis, Brisbane units. But we're all in the same. But Sydney too, down 24% year-to-date versus the same period last year, and Adelaide down. The only, the better performer, certainly Melbourne, which is down but steady-ish. But Perth is just really has ramped up its building industry to, cater for all that demand, which is created that boom market. And I'm sure governments are happy to see that development going forward. But we're certainly not getting the development levels that we would need to match the government's target, which is they're looking for 1.2 million houses over the 6 years to 2032. That's their target. But good luck with that, because we're tracking it, which would mean we'd need about 200,000 houses a year to meet that target. We're currently approving around about 160,000. So we're well behind those targets, which are those targets were set about a year ago. So good luck with that. That's the long-term trend for the capital city building market, home building approval market. You can see it's still down 40% from its peak. That's the story about our undersupplied housing market in capital cities, high rents and high prices. You can see the black chart there are houses. And houses have certainly started to pick up, still below the previous or the peak prior to COVID, but nonetheless, that's a clear trend upwards for house building approvals. But behind that, you can see in the beige colour that look at units. Whoa, 60% down on the peak back in 2016. Look at that fall. That's a massive fall. Just looking at the trend and continuing to head south. And you got to understand, even if we started to get more building approvals for units, and these are approvals, they don't all become, actual completions. And even if we got a surge in unit building approvals now, it's going to take 3 years before they become, a habitable property. So, this is in the pipeline, fewer coming into the marketplace from that reduction we've seen over the past 3 years since 2021. And hence we have high rents and high house prices and a real crisis in terms of accommodation. Hence the government trying to do everything it can, election next year, to try to ease this problem. And all the capital cities are in the same boat. When we look at the previous peak of the cycles for each of the capitals, as we just did with the overall capital city market, you can see there that there's some big falls. And we spoke about Brisbane. Brisbane units are down 77% since their previous peak, which was in April 2016. So they're now building 77% fewer properties than they did at their peak, which is 6 years ago. But of course, we're not seeing any sort of relief in terms of, as we discussed before, that oversupplied potentially, which they were so wrong about. The so-called experts and the media, we're still seeing big rises in rents and prices for Brisbane inner city apartments and Brisbane apartments. So no real improvement there. All down, all undersupplied, all having to suffer high rents and low vacancy rates And as I said, on the supply side, we're really not seeing any relief where we probably need it, and that's in the unit market. Even though we're seeing a better result from houses, in terms of investment properties, it's more likely to come about by a surge in new unit supply. Not seeing that anywhere near yet. So we've had the spring auction market officially begin. Some mixed results, as I mentioned before. Sydney and Melbourne, solid results, encouraging results, despite just a little bit of lower listings in Melbourne and a bit of a more significant fall in listings in Sydney. Smaller markets, however, as I mentioned, reported sharp declines in clearance rates. Maybe a little bit of a weekly blip. Maybe also we didn't get a lot of reported auctions coming through, actual results. So we'll watch for that next weekend. But we can certainly expect this to continue over coming weekends, the usual spring rebound. So this is the data. The Sydney auction, 792, down about 100 auctions from the weekend before, but the clearance rate was actually higher. So plenty of appetite still there for buyers, maybe because there were fewer choices. The clearance rate was ticked up a bit, but we're still tracking well ahead in terms of the numbers of auctions last year over the same weekend. Sydney higher again. It's been like that all year. And the clearance rate, hey, look at this. The clearance rate, not that much different from a year ago. It has been significantly lower because a year ago, through August, through July, through June, we had a very, very strong market where we had fewer auction numbers and high clearance rates. And of course, we knew we had prices growth as well. But now we're starting to track where we were a year ago with our clearance rates, which is very interesting. Not that far away, that Sydney clearance rate. Melbourne, down a little bit in terms of auctions, similar auction numbers, but its clearance rate was also higher, Lachlan. So some more positive signs gradually coming into that Melbourne market. It's certainly been very consistent in the mid-60s. Of course, we've got to point out that Melbourne and Sydney are very much spring selling season markets. And that's because you get more of the prestige markets, the higher price suburbs coming into the market, because they do favour particularly those end of the year or second half of the year markets, spring markets. So we're seeing that. And of course, that means more buyers, more sellers in that section of the market, which has been an underperformer. Let's be frank, over the last few years, the higher priced properties, and it's really dragged that Melbourne market down. It's been one of the factors that's kept Melbourne from bouncing back as some of the other markets have. But Melbourne and Sydney have a significant prestige market, whereas Brisbane, Adelaide and Canberra don't, as a proportion of their overall market strata, if I could describe it as that. And we are starting to see some better results from the Sydney regions, inner city prestige regions, Northern Beaches, the city and eastern suburbs, and also the lower north have been consistently over the past few weekends producing higher clearance rates. So some good signs there. Melbourne's still not so much the higher priced properties. It's more about the mid to lower priced regions in Melbourne that are still doing pretty well and really holding that market up. So no real sign, as there is in Sydney, that the prestige markets are picking up in Melbourne. But again, the clearance rate in Melbourne, not too far away from the same time last year, and auction numbers are higher again than over the same weekend last year in Melbourne. Brisbane fell down a little bit on the weekend. We need to take some of these results with a grain of salt, but we'll await next weekend's results. Auction numbers about the same, but the clearance rate down. Clearance rate about the same as it was a year ago. So perhaps some local factors there have distracted buyers over that weekend. Maybe it was the Echo that we have in Brisbane. Adelaide, similar auction numbers, but it too was down, not too far down, really. Still a good result there for sellers in Adelaide, pushing up towards that 80% result. And Canberra had a bit of a shocker, just at 38%. It's been really encouraging Canberra lately, a bit up and down, but certainly has had a few 60% plus results over the past month or so. We did get few actual reported auctions coming out of Canberra on the weekend. So maybe that was part of the reason we didn't get a full range of auction results. So we'll watch out next weekend to see if that sort of recalibrates itself. So yeah, a bit of a mixed result there. Good signs continuing in Sydney and Melbourne, early spring market. Maybe some local factors have just pushed, particularly Brisbane and down, and Canberra, we just had a bit of under-reporting. So we'll just quickly look at the trends so far over September. So this is obviously the clearance rate we had from the weekend, because it's our first weekend in September. So we can see there that Sydney tracking at around about where it has for most of the year, to be quite honest, very consistent. And that's all. Anything over 70% is really a seller's market, where we would see upward pressure on prices, which we do see in Sydney. And look at Melbourne. Melbourne's actually the highest it's been since the beginning of the year. So very consistent results there in Melbourne. We sort of await it to start to move above 70%, and then we can start feeling a bit more positive about the prospect of the Melbourne market. But there's no doubt that trend has been rising, and that's what we've discussed, that there is just a reawakening of that Melbourne market, and that's once confidence is started to sort of reestablish itself, we will see that Melbourne market, I believe, start to recover some of the, market energy that it's lacked over the last couple of years.
Brisbane opportunity, Doc.
Oh, absolutely, 100%. And because the other factors are still quite reasonable in Melbourne. The economy is not too bad. It's obviously affordable when we look at the other capital city medians. In fact, Brisbane and Perth are nearly catching up with Melbourne. So can you believe Brisbane, will become more expensive than Melbourne? But as you said, the portents are positive for the prospects of the Melbourne market, and we're starting to see some results supporting that. Adelaide, as usual, Australia's strongest capital city auction market, pushing up well above 70%. Adelaide just keeps on keeping on. And Canberra, as I said, we didn't get a lot of results out of Canberra on the weekend, so maybe we'll have to wait till next weekend to see. What has been an improving market over the last month in Canberra, to see if that continues through spring. Again, similar to Melbourne, it has some opportunities, I believe, the Canberra market, but it's been a little bit inconsistent lately. If you're looking for those auction results, you can get the headline results, all the capital cities with their auction clearance rates and listings compared to the previous weekend and the same weekend last year. You can get them around about 6:30 on my LinkedIn channel, which is Doc Andrew Wilson at LinkedIn, and you get the full national report on Sundays, which includes the breakdown of the regions of Melbourne and Sydney. So there's some good insights into what's happening on the regional level. We know those auction results are a fantastic forward indicator of what's happening in the market generally. So you get that breakdown of the regions in Melbourne and Sydney, and you also get the top 10 sales out of each of the capital cities under the hammer on that particularly Saturday. So those come through on Sundays. If you're looking for the latest national report, that national weekend report with the regional breakdowns and the top 10 sales, there is a QR code which will take you to the latest national report from last weekend. So we're going to finish off now, Lachlan, as we do, just quickly with our My Housing Market Infinity Suburb Data app. If you're wanting to find out what's happening in your suburb or any suburb Australia-wide in terms of what asking prices are and asking rents are at the moment, it's a great little model if you're doing analysis.
It's a fantastic tool, Doc. Absolutely.
Yeah, and you can just whack it on your computer, on your phone, and it's there. It updates on a daily basis, so you're seeing what's really happening. That's the QR code for that. You have to go through our friends at Infinity to get the password for that. So have a chat with them, but it's a great little tool. And it's telling us what's happening. Every suburb that has data in Australia is on this particular little app. So we can filter that for price or rent. We can filter it for the regional areas or the capital city area. We're using Blacktown there as an example. You can filter it for house unit or townhouse, number of beds. You can also filter it for. So there's lots of choices there. So you can drill down to to the very specific parts of the suburb in terms of the house or unit profiles or the property profiles. And it's not just the median price it comes up with, it also comes up with the high and the low. So you can see this sort of range in each suburb between the middle price, the high price, and the low price. I think that's quite important. And it also shows you the number of listings, properties for rent or for sale. And that's what we have for Blacktown for sale, and this is what we have for Blacktown for rent. So get a hold of that one. Next week, we will have the July home loans data. We've also discussed that a little bit. We'll also look at the July house building costs, which I know a lot of our viewers out there and our listeners out there are interested in how house building costs are tracking. So we'll have a look at the latest My Housing Market House Building Cost Index. And we're really moving through spring now. Well, sort of, but we are moving through it. And we'll be in our another weekend of spring results. So let's see how it pans out, particularly with a couple of those maybe slightly surprising results we had from last weekend, to see if that consolidates, particularly whether those Sydney and Melbourne markets are continuing to have the spring fever, which they get every year, Lachlan. So on that happy note, this is our full slide deck for today. So you get a QR code for that, which will give you a PDF copy of today's presentation. So that's all from My Housing Market and Infinity today. Lots of stuff there that you can think about and prognosticate on in regard to making a buying and a selling decision in Australia's property markets. So that's what we try to do, is give you all that analytics every week, commentary to support it, and so you can reinforce your decision making with accuracy and rational comment from us, from we at My Housing Market and Infinity. So thank you very much, Lachlan, and we'll catch up again next week.
Always a pleasure, Doc. Thank you.
Good on you, mate.
See you, mate.